topic for discussion today is really to figure out what fintech's, how fintech's journey has been and what the future is going to be. We had an initial discussion with Khushru earlier in the day where we talked a little bit about how fintechs have evolved and what the future is going to be. But with these panelists, we'll explore and deep dive in terms of how their experiences have been and what their views are on in terms of how the fintechs will evolve from here on. Fintechs, while in the country is still young, but they have made significant inroads, especially in the B2C segment. If you look at payments, they got a fillip during the demonetization time. Digital lending and payment together got a fillip again when the COVID pandemic hit. And especially in the B2C segment, I think the fintechs have done extremely well. Now, what are the segments and what are the key niche areas that the fintechs will take on from here is something that we'll explore with each of these panelists. So my first question will be to Ashutosh, given that his company is into supply chain finance and yesterday itself, RBI released a guideline on FLDG, which again encourages digital lending on the retail side. And we have seen that digital lending has come a long way in India in terms of the way they have been hyper-personalized for each of the users. And there's a term that I'm going to borrow with an ex-colleague of mine who used to call it as a sasayization. It's a term that FMCG industry uses, which means that break down the financial services into smaller bits which can be consumed at an affordable price. And that is what digital lending has done, especially on the retail side. I just wanted to understand from Ashutosh that while ascertaining or undertaking KYC of an individual is fairly simpler given that India has a digital ID available. Users are giving out data as we speak while we're sitting Internet of Things and social media, etc. So people can, fintechs can harness that data. But from a B2B side, that information on non-individual is not necessarily available. So are the fintechs who are operating in the B2B space, how are they solving for this problem and are they really transforming the way lending happens in the B2B space in the current state?
Okay, thanks Rohan. Good evening everyone, and just probably to look at how B2B and B2C fintechs are different. KYC is one small aspect, but from an underwriting perspective also there's a significant difference between B2B and B2C fintechs. Now, there is a lot of initiative which has been taken by the regulator also around KYC and digitization on the B2B space. Of course, we've done significant advancement with COVID, with Demon on the B2C side, both in terms of KYC as well as underwriting. Digital underwriting and KYC is something which is fully possible now, and most of the leading financial institutions have pivoted towards digitization in their lending journey. Partners like CredAble help the financial institutions achieve the goal. Now, what we really enable is capturing data through and enabling KYC through means of CKYC, VKYC, etc. Now, these are all possible for businesses as well. Underwriting is a larger and a much more complicated piece to solve for on the business side, on the B2B lending side. And there are various ways in which we enable underwriting as well on the B2B space. One way to do this is if underwriting is predicated with small businesses dealing with either procurement or receivable of large business, and we can capture data of this business association and predicate credit risk because they've been dealing with a large business on the other side, mid-size or the large business. Now, for us to enable that, we need to capture the data around the business association, which could come in from the large company, which would come in from the SME, which would come in from the GST data, and that can also be digitally pulled out. The alternate way to do this is if there is no association with a large company and SME is dealing with another SME, then how do we enable lending to that SME, right? Now, fundamentally, even that leg can be solved digitally in terms of underwriting, provided the SME has access to GST and we can cull out data from GST. There is initiatives by the regulator around account aggregators, so bank statements can be pulled out through account aggregator. If not, this bank statement data can also be uploaded through digital means, and the entire underwriting journey can be digitized. Now, as fintechs, what we are enabling is to large banks, we can, given this solution as a SaaS, so that they can digitize their entire underwriting. Alternatively, fintechs who are also NBFC like CredAble, we can curate specific portfolio of the lending book, which then large participants could participate through a capital market transaction through securitization. So we can bolster significant capital by digitizing in both KYC as well as underwriting and enable liquidity to SMEs.
Super. I think that's great, the way you guys are leveraging technology to solve for these problems, because typically non-individual has been a clunky problem to solve for, and with fintechs coming in, I think we'll see significant innovation in this area going forward. Let me come to Arun, Tikoo, sorry. So we have seen payments in the B2C space as one of the oldest fintechs in the country. I mean, almost 12, 15 years. It all actually started with BillDesk, so maybe 20 years. And they have made significant inroads in the B2C space where payment has become almost ubiquitous. It has replaced cash in some section, and it is driving less cash economy. Cashfree works on the B2B space. Have you seen similar success in the B2B space? What are the fintechs doing in the B2B space for solving for payments problems that entities face?
Yeah, thanks, Rohan, and thank you for having me here. I think if you see the journey of after UPI was launched by NPCI, and the B2B space actually picked up very fast because they were smaller payments, and the journey so far has been a great success. If you look at the number of UPI transactions which are happening, something around 1.2 billion transactions have happened last year, and prior to that it was something around 78 odd million transactions happening in a year. So the growth has been there, and same thing has happened into the B2B space also. It is not of that level, but I think the adoption of companies using the fintechs, which is helping the customer to get the collections and payments in a faster way. The challenge at this particular moment is, I think there's a trust factor which is there, that is actually what you call which is building up. I think what has happened during the pandemic and what has happened during the demon time, it actually aggravated the usage of. So when it was B2B earlier, everything was being written, whether it was an RTGS, the people used to do it through the branches and all that. Now both sides, they want to use the digital platforms to use whether it is UPI, whether it is cards, whether it is debit cards or net banking. That is very prevalent these particular days, and I think this is going to go further. As a cash-free payment, we not only help the merchants do that collection through all these modes, we also help them by giving reconciliation solutions, invoicing solutions, and I think this has actually helped the customer to get the funds on a faster mode. Yeah, it is still a slow start, because I think there's a bigger market which is yet to be catered, yet to be come on to this particular stage, but it is gradually growing in the days to come.
Yeah, absolutely. I think, as I said, these are early days, and I'm sure as you guys evolve, it will scale up. So with that, let me come to Abhishek. Abhishek has been a career banker, a part of the largest fintech in the B2C space, and now he's part of M2P, which operates in B2B. So Abhishek, in your opinion, which segment or where does the real opportunity lies? Is it the B2C or the B2B, or you think which one is the more challenging one to solve for fintechs?
From an opportunity perspective, are you talking about from a revenue perspective or the thrill, or what is it? You know,
whatever is your perspective.
I think the opportunities happen on both sides. B2C has the thrill of the fact that there is scale in the country. You reach out, and every new product or a new service you do, you're talking about millions. But there is definitely a challenge of the revenue structure around it, and how do you kind of monetize it. The belief is that the monetization, the digitization in some of these platforms, whether Aadhaar or the entire digital stack, will help getting a lot of services to the last mile, and there will be monetization of the same. It's something which is work in progress. We're seeing today lending, there was a flavor of payments, today is a flavor of lending, tomorrow maybe insurance. Some of these things will keep playing out, but B2C has that challenge of monetization. B2B on the other side is slightly long haul, it's not exciting, but definitely the revenue pools exist. So this is a current context situation. In the current context situation, B2B from a revenue perspective seems to be much more exciting than B2C. But in the long run, over a 10-15 year period, once you have the trust of the customer, once you're already in, scaling businesses in consumer is going to be challenging or different. The other way to look at this is B2B will allow far more players. B2C at some point in time will consolidate more and more, because as a customer, you can only have that much of mind space or phone space, as you call it today. So I think B2B has again opportunities more from multiple players being able to serve. Consumer will kind of get consolidated. So that's how I kind of do between the two. From an employee perspective, both are again exciting. Again, depends upon what you really want to do. Consumer gives you a new high, but B2B is something which is solutioning, where you're personally meeting somebody. In consumer, you don't get to finally meet the customer. So those are some of the things that I can talk about.
Yeah, absolutely. I think one of the things also I feel will play out is that in the B2B space, there are multiple niches which are currently underserved by the incumbent BFSI institutions. I think fintechs will definitely want to solve for those and dominate those sectors for sure as starters, and then maybe make a bigger play. So yeah.
Yeah, absolutely.
That's huge scope.
Yep. Yeah, Rajan, yours has been an interesting profile. You are a technologist at heart, a chief innovation officer at BBPS. I just wanted to pick your brains on what RBI has launched, which is called the CBDC, Central Bank Issued Digital Currency. We understand that, again, it's a currency. It's not really a method of paying. But given some of the features of CBDC, such as associated anonymity that RBI has mentioned that it will have, one of the things that payment companies do is when they process payments, they also get access to customer data. Now, with CBDC coming in, that aspect of acquiring customer data will probably go away because it is supposed to be anonymous. So you think with CBDC being launched, will it disrupt the play of fintechs in the payment space?
Yes, actually that is what I think it will do, because one of the key features of CBDC is something called programmable money. So let's say you want to make a recurring payment for every month for a particular amount, right? You can't do that in cash, right? Nobody can actually come and take the money from you on a regular basis. But you can actually program a CBDC account to actually process a transaction on the recurring basis. That is one of the features of CBDC. Other thing is one of the concerns which people have, whether CBDC is going to be anonymous. So it has been designed to be anonymous up to a certain extent. So that anonymity is up to definitely is there. And besides that, one of the key features of CBDC is it's actually supposed to be looking like it's on a blockchain. So it's a digital currency, but at a basic layer, only with the transaction between the banks and the central government is on blockchain. And after that, there's a layer. So for real-time processing, CBDC is not on a blockchain. Mm-hmm. So that's why it happens in a very fast manner, because typically on a blockchain, you have a concept something like a gas, right, for the processing. It might take quite some time. So that is a layer which they have put it aside, and the ground level transaction of the CBDC happens on a regular UPI-like network. So I feel CBDC is something very well built for the future, and it's going to go for quite some time. Yeah.
Okay, so is that an opportunity for the fintechs, or that's set to fintechs payments?
The immediate opportunity for the fintech is many banks are want to integrate with CBDC. So only a couple of banks like HDFC and ICICI Bank have integrated. So there are almost 1,500 more banks to integrate. So there is a huge space actually for fintechs to operate over there. And as of now, there is no PG, payment gateway, for CBDC. So I know some players who are already developing it. That is another sector for the fintechs to go ahead actually.
I'll just do a plug-in here. If some bank wants CBDC, we're happy to provide the technology.
There they go.
You're not allowed to make sales pitches here. But great, thank you so much. Also, I wanted to pick your brains on the platform that the government of India has launched called the ONDC.
Yes.
A lot of these e-commerce players feel that it is a direct competition to their business model, and that they are already serving the customers well. So why is there a need for such a platform? Is ONDC again a disruptor for the e-commerce business and for the fintechs as such?
Yes, actually ONDC was designed to be a disruptor for the fintech. So what the government observed, like, you know, the e-commerce market was being dominated by some top players, monopolistic players like Amazon Pay and Flipkart. And from the seller perspective, like, you know, let's say they first register the products on Amazon, they have to again go and register the product on Flipkart. And like, you know, they have to do it twice actually. And both of them were like, you know, somebody was like deducting 30% commission, somebody was deducting 25% commission. And on the buyer side, like, you know, let's say you want to search for a fan. You have to first go to Amazon's website. You don't get the good deal over there. Then you go on Flipkart website and you go on a lot of websites. So now ONDC has been introduced in between. It runs on something called a backend platform. It actually like disconnects the buyer and the seller. So, and what really happens, like, you know, when you put in a search, right, it goes to the ONDC platform, and from there they actually put, in a democratic way, they put all sellers on the same ground. So Amazon, Flipkart and the local Kirana stores, they all will be treated at the same level, and it will be shown to the customer. Now the customer has got the choice to, like, you know, buy something from Amazon, right, and get the delivery for some, let's say from some other player, and they take instance from somebody else. So I feel like ONDC will again cause a disruption in the e-commerce market.
Yeah, possible. Thank you. Ashutosh, let me come back to you. And this is my initial assessment of how fintechs are, being that they're still young, they're still evolving. There is a bit of heightened regulatory scrutiny that is being applied on the conduct of fintech, especially on the lending side, given certain incidents that have happened. RBI and the other regulators as well have voiced concerns around automated decision models for lending, etc., which could have inherent biases. So from a B2B fintech space, you think navigating regulatory environment is a challenge, or what could be other challenges that you guys face on a day-to-day basis?
I think fundamental question to ask is regulation an impediment? And our firm view on that is no. I think it's important to be regulated because then it brings in consistency. If you are lending out money and if credit is the sole criteria, right, to evaluate, consistency is required in terms of how credit decisionings are happening. So regulation is very, very positive. Now, in terms of, see, large part of regulatory capital comes in from banks. No matter what fintechs do, at the end of it, it is banking capital coming in. We are merely conduits which ensure the banking capital goes to the right borrower. Now, if we are playing the role of conduits, whatever we do needs to be in the ambit of current regulations. Now, and which is why all the regulatory initiatives which are supporting underwriting, KYC, the means with which lending can happen is very, very positive. In fact, India is far ahead in terms of how the regulator is providing great initiatives so that fintechs can add value to these lenders and the lenders can deploy capital. You compare India to any other developing or developed economy in terms of regulatory initiatives which have happened in the last 5-10 years, India will be far ahead. CredAble as a fintech has just started expanding outside India. A core difference that we notice, right, when we look at other markets, and you look at Singapore, you look at Indonesia, Philippines, you look at Middle East as market, right? Now, what RBI has done or what regulators have done with account aggregator, with GST, with so much of data which is available, with KYC completely getting digitized, these are initiatives which are not there in a lot of other countries. Now, I don't think these are impediments. So regulations are not challenged. Regulations are welcomed. They bring in consistency in which we can deploy capital, and financial institutions need to deploy capital. So regulations are welcomed.
No, well said, Ashutosh. Totally buy that point. I think regulatory guidelines give you the boundaries conditions, and if you're able to work within those, I think there is no challenge at all. In fact, it's an opportunity.
I'll just add one more point onto that, right? Now, our regulator is such that they're not biased. If a view is taken, the view is forever, right? Look at what happened with the FLDG guidelines. They got changed, right? RBI is quite liberal with regards to taking feedback also from fintech and banking fraternity. If there is a regulation which is coming, but it is anti-business or business can do better if there are changes, they actually end up doing these changes and they do it very, very fast. Gone are the days when regulator was taking forever to do these changes. So just yesterday on something which they had rolled out a couple of quarters ago, they did allow some leniency with regards to how lending can happen through the digital lending guidelines. And these changes are really welcoming for the fintech fraternity.
Yep. I think what the regulator has definitely been progressive, and you're right in terms of the way they take feedback from the market, they incorporate, and they evolve as they go along. It's an iterative process for them as well. But yeah, having said that, quick question to Abhishek, Arun. You have again, as part of fintechs, been part of, and fintech started out as partners for the incumbent BFSIs. Now, given that there's been certain change in the way RBI has been looking at fintechs, some of the fintechs increasingly are looking to obtain authorization from regulators. So, you think this is a strategic shift from for fintechs, where they used to just partner with incumbent BFSI institutions, but now are increasingly looking to enter that space themselves by getting licensed?
So I think it's an evolution. It's a question of, it's a nuanced situation. The nuanced situation is that at a point of time, fintech was a young industry, so it's becoming an adult. So when you are younger, you do try and do multiple things as at a particular scale. When the scale was not there, it did not make sense for the regulator to kind of come in and stop the innovation. So that once that innovation happened, a certain scale happened, now regulations are welcome. So that's one part of the answer. We also need to look at it in the context of it's money. India is a low trust situation. You can't have a situation where people start losing money. The third element to this is that so it's a call between distribution and manufacturing. And I'm not talking from a commercial perspective. Is distribution, if I was a fintech and if I had a lot of customers, is distribution leading to much more revenue and much more engagement with my customer? Or if I become a manufacturer, will it lead to better customer journey? The one part about the regulatory angle where I'll have to probably invest in more regulatory infrastructure and so on and so forth, that's fine. But at the end of the day, at a business commercial level, you will see that are you able to serve your customer better? Is the customer experience better? And commercially, will you make more sense? So I think it's a good opportunity for fintechs to become, come in the regulatory space. And that's the entire journey. Even in banking, there were payment banks, small finance, and full-fledged banks. So I think this is an entire continuum which will get created. It will be good if the regulator does allow, some kind of situation. For example, if you are a PAPG or if you are a PPI, then the lower order license comes to you automatically versus for everything it becomes a license and a process. I think the regulator is working on that, and there are SROs similar to what IBA has on the payment side which has been proposed. Some of those elements will help this to move faster. So my personal view is that it's not a bad thing, but it's also context of where you as an organization are. It's not a one size fit all.
Yep. So Arun, follow-up question to that. Given that it's evident that fintechs are getting increasingly licensed and entering voluntarily the regulated space. So how do you think this will play out? Are they going to be competing directly with the incumbent PFSIs, or are they going to select niches to dominate on, or the collaboration continues?
Yeah. No, I think very interesting question. I think we all welcome this regulatory thing. It is actually right time to actually get regulated, have the compliance in place and everything. I think the partnerships with the banks or financial institutions will continue. I think my sense is that because I've seen both the sides, from the banking side also and the fintech side also, banks traditionally has been, if you look at banks normally used to open an account. They used to manage your funds like deposits. They used to lend money. They used to have insurance, and they used to give you wealth services. So all these 4 or 5 microservices they used to give. And what has fintechs done? I think they have taken all these elements as a separate entity and worked on whether it is a payment company, so phone pays and Paytms, and they were there wherever there was gaps. So these fintechs actually came into the picture and they started flourishing. Similarly, if you look at the lending majorly banks were into the larger what you call corporate lending or maybe mid-market lending, but the smaller ones were still there, which was unpenetrated. So there you look at the companies like Bharat Pay, where they are funding based on the whatever the collection they and the ticket size is less than 20,000, 40,000. So these are the things. And there was a space, there was always a space where the fintechs actually played. Look at the wealth tech. There are companies like Zerodha which are making tons of customers. So I think this partnership will continue, and the custodian will always remain the bank. That's my personal view, that because ultimately the money is getting settled, and fintechs are only helping or giving better solutions to the customers. And if I see the journey, what I have seen, now banks are also very open as far as partnering with fintech, whether it is a bigger bank or a smaller bank. For all these services, they want to partner with you. Now they don't see you as a competition. They see you as a partner in the group. Because ultimately, at the end, the money is getting settled there, and they want to, I think, lend to the bigger ones. And the market is still open. And I'm sure these sort of opportunities will continue in the future also. So my sense is this partnership will keep on growing in the future also.
Yeah, makes sense. So Arun talked about banks or the incumbent BFSI sector concentrating on customers where they could monetize better, and therefore there were certain segments which remained untouched, underbanked or unbanked. Now my question to Rajan is that you think fintechs will be able to drive the agenda of government of financial inclusion, and the flip side is that the segment that requires financial inclusion is a segment which is difficult to monetize because of the ability to pay is not really there.
Right.
So what do you think will be the way forward? Will the fintechs really drive the financial inclusion agenda for the country?
Right. So financial inclusion is a topic which is very close to my heart actually. And as a part of a country which has 140 crore population, we do have like 40 crore bank accounts, but still like, around 35% of our country's population is still underbanked, right? And in the financial terms, they are called as like, no-file customers or new to credit customers. So there are many banks who would like to lend them in the farm sector and other sector, but the challenge which they are facing is like they do not have any data of these particular customers. So one of the alternatives, which is possible is like something called alternative credit score, which can be created based on which the banks can lend. We ourselves are actually working on similar, alternate credit score, but there are fintechs also who could do something similar based on the data which they have. Like for example, let's say I have a lot of respect for companies like Swiggy and Zomato, who have created their own micro-entrepreneurship platform actually, they have created jobs in India. Similarly, they also have a lot of leverage of their data. So let's say they have like 1 lakh people driving around, they have data of this 1 lakh customers, 1 lakh delivery boys. They can actually create the credit report based on the performance of this person, and they can expose that data to fintechs, and the fintechs can probably create a lending book based on top of that. So I would like fintechs to encourage micro-entrepreneurship in our country and create jobs for the, for the population. That's what.
No, absolutely. I think that's what I started off as well saying, that data of individual gets generated at multiple points in time, and they can be harnessed well.
Right.
Of course, the challenge is harnessing big data is also not that simple. But
Right.
as technology evolves, I think we'll get there. So we're almost out of time. I think the discussion was fairly interesting in terms of we touched a lot of aspects.